Well, hello everybody. Welcome to P.B.M. Money. I have made a fundamental change in the way that I am investing in the market, and I wanted to share it with you so that you could take advantage of this strategy if you choose to between now and the end of the year. Now, the old strategy that we had was when we got in the market in 2020, everybody looked like a genius. I mean, everything was in the toilet. And the good sound companies were all going to come roaring back over time. We just didn't know the timeline. And we just started dollar cost averaging. I look back on it. I wish I'd have dumped everything I had into it, but it is what it is. But as we did that, and I would buy a new stock each month, I would spend the month researching, find the best candidate. I was looking for growth plus dividend. And each month I would buy, and we did well. We were putting in about $600 a month, and we were taking about that much in profit out every month. We did very, very well. So, about a year later, I noticed, now I don't watch the market. I have no idea what the market's doing. I watch my stocks. And for about the last 3 or 4 months, they've been trading sideways. And when you're buying growth stocks and you're going sideways for 3 months, you're not doing it right. So I kept looking for a way or a strategy where I could continue to buy growth stocks long term. Now, when I say long term, I mean 3 to 5 years, because in 5 years, I'm probably going to be liquidating the market money and taking that to buy my duplex. But in the meantime, I'd like for that to grow substantially. And the stock mix that I had up until a few days ago wasn't going to get me where I wanted to go. So I had watched a video by a guy named Jeremy, and he was talking about the stocks that he had just bought that day, and he had spent like 25 grand just that day. And the last stock that he bought, he said, this is a new stock for me. I just opened a position with it with $1,500. And I thought about that for the longest time, and I thought, you just spent $25,000 in the market in one day, and you open a new position with $1,500. Why would you do that? Why not just put 20 grand in? So that rattled around in my brain, and I thought about it for the longest time. And then I remembered a term that he keeps using, and a lot of the guys keep using. It's called building a position in the market. And I never really totally understood it until I understood it, if that makes sense. Okay, so he decides he wants to buy into this company, and I don't remember which one it was. And he jumps in with $1,500. Well, let's say the stock costs $10 a share when he buys it. Well, let's say tomorrow it's $9 a share. So he'll dump another $1,500 in there. That takes his cost down to $9.50. And then he lets it sit, and when the price of the share goes back down below that, he'll buy it a little bit more, just to, over time, take his cost basis down. And you say, well, why didn't he just do that with 20 grand? Well, because the more you have in it, the harder it is to move the needle downwards. If he'd have dumped $25,000 in at $10, he would have needed to drop another $25,000 at $9 just to get 50 cents a share difference. But at $1,500, if he really thought that was the bottom, he could jump $5,000 in there and take his basis all the way down. But the building of the position is to increase your stock amount holding and decrease your cost basis at the same time. And as soon as I understood that, I knew how I could make long-term money in the market. So I had started a position in the Honest Company a couple of months ago. And when I bought in, my per share cost was $10.30 a share. And I just let it sit there, and it was going down slowly, but I noticed lately it was going down pretty substantially. So last month I took the $400 we would normally spend, and I bought more of the Honest Company because it went from $10 down to just above $9. So I doubled it, got my cost basis down to about $9.80, I think, is where it was. And I thought, okay, that's cool. Then I looked a few days later and it was down in the eights. And I was like, oh wow, this is an opportunity. So I thought, well, I don't have any cash, what can I do? So I looked at my other stocks and I realized they've been trading sideways for 3 months. They're not doing me any good except giving me dividends, and dividends is not where I want to be for the next 5 years. So I didn't want to go in and take a lot of losses because I had a couple that were down, a couple that were up, and a couple that were even. So I thought, I've taken some profit this year, not much. But so I want to try to find one of the stocks that I have that is pretty much at a break-even point. But over the last year, the growth had reached about where I thought it should be, and I sold those. Sold 2 of them. Had about $1,000. Took that $1,000 and bought in right at $8, if I remember correctly. And that took my cost basis down to about $9.03, I think is where it's at right now. And I checked this morning, that Honest Company has dropped again. It's now at $7.75, which is a 52-week low. If I had more money, I'd go buy more. And I think there are a lot of stocks out there. I just happened to pick the Honest Company because that's the one that I had started a position in. And I think what I'm going to do, because I know that at some point when it's time for me to go buy more shares, the Honest Company is going to be on the upswing or breaking even, and I'm going to need another place to start building a position. Now mind you, I still have a half a dozen other stocks that have got, I don't know, $400, $500, $600 in each one of them. So the growth stocks I originally had that are trading sideways are going to keep me a little bit stable for now. And I think I'm done for a while building in the Honest Company. I'm going to let that one sit. But I'm going to look for some other stocks where it looks like they're at 52-week lows and might go lower, but where the fundamentals are good and the long-term outlet, 3 to 5 years, looks pretty good. If I find another one of those, and I've got 2 or 3 or 4 that I'm watching right now, and they all qualify, frankly. The question is, how much do I want to do? How fast do I want to get in? And how big can this position be? Now, the reason I wanted to bring this video to you now is because that psychology is going to have a huge impact in the next month and a half, because the professional investors, the large institutional money, is doing something called tax loss harvesting, which means they've taken profits through the year, and now they're going to try to sell off some of the dogs, in their opinion, to offset the losses that they've had so they can lower their income taxes. It's done almost every year. It's legal. And what they'll do usually is they'll sell it off at a loss, write it off, and then I think the rules say 30 to 45 days later you can buy back in if you want to without any tax consequences, but you have to wait 30 to 45 days. Well, as I record this is the 22nd, I believe, of November. So there's 4 to 6 weeks left in the year, and then there's not that many trading days because of the holidays where the market will be open. So the tax loss harvesting is happening right now, and it's affecting a lot of stocks. So if you've been watching some stocks that have good sound fundamentals, good long-term growth, but they're caught up in this, as is the Honest Company, I think this is an awesome time to change the way you're doing investing. And I would not do it all all or nothing. If you've got some good, solid, hold 'em, I would. But I would keep my eyes open, and I am going to open a position in the next month in another stock where I can start building on that one. If they all come roaring back, great. If they don't, that's great too. I'll just start, after the first of the year, I'll just start putting money into the ones that are good and stable. And we'll call it a day and just wait for the stocks to go down where we can build a little bit more. Now, if you don't have one in your back pocket where you can just go build a position at, but you want to do that, and you have stocks or you have cash, just sit it on the side, go do your research, and because you've still got 4 to 6 weeks. Because chances are if they're heading down, they're going to stay down till the first of the year. So just be patient, wait on the side, and when you're convinced that a certain stock is at a certain point where you feel comfortable with it, pull the trigger. Because everybody else is going to be buying in January and February, and the market should start to turn around, and that's when I'm going to stop buying. But between now and then, I'm going to pull out everything I know how to go buy some stock. Even if I have to get an advance to do it, I'm probably going to go do that. So this strategy I have found is whether you have low income or high income, but the building of the position is an ideal way for somebody that has limited income and your dollar cost averaging. If it's time for you to invest for the week or the month or whatever period of time you're investing, and everything is up, or you don't think you feel like you're just going to waste your money, just set it on the side and just do your research and find a go-to stock that you can put your money in that is going to go up in the long term, but in the short term is just getting beat up. That's my new strategy, and we're going to start doing that from here on out. I am still going to continue at some points to build on the solid stocks that we have, but I'm also going to increase drastically the amount that we put percentage-wise into these long-term growth stocks. Well, that's about all I wanted to say. By the way, none of this is stock advice. It's just some guy on YouTube sharing what I'm doing. You guys have a great day, a great week, and happy investing.